everyone's here. Great to have you guys here. So we have with us Carl, Spencer, Boris, and Adrien. Did I get your names right? No, so you guys are like swapped. Okay. Let's just do self-introductions, right? And then you guys can basically spend like 30 seconds introducing yourself, what you do at company, and then what you think about adoption, user adoption of blockchain. So I'm a host for today. I'm Leonard, the CTO and co-founder of Web3 Off. Our entire mission is to make sure that wallets are not a UX problem in blockchain. We spent over 4 years working on this problem, making sure that it's both secure, has all the properties of non-custodiality, and also you get something that's really usable for users. So that's what we do. Yeah, on to you.
All right. I'm not sure if you can hear me okay. Hopefully it works. My name is Adrien. I have a tech background. I worked in the US and in China in cybersecurity. I started working in crypto or getting interested in crypto in around 2015. I started with real estate tokenization and trying to move really money around. I was moving money around from China to Europe, which is difficult to do. I was working in Beijing. And that was really the rabbit hole for me. I really enjoyed that. Started to play around with smart contract development and so on. And then I was hired by Consensus. I worked on MetaMask and Infura for about 4 years as head of engineering. And recently moved to Google Cloud. So around 7 months ago, I moved to Google Cloud as Web3 principal architect. And I think it's a move that a lot of people are questioning, but I think blockchain is infrastructure and we need maturity in the space, definitely. And I think we are doing a lot of great things and hopefully you can check it out.
Okay, cool. Hey everyone, I'm Spencer. I work at Uniswap Labs. I've been there for a couple of years now. I mostly work on the Uniswap wallet product, which if you use the Uniswap wallet, I have some special swag somewhere out there. Feel free to talk to me about anything Uniswap related, Uniswap v4, v3, hooks, Uniswap X, my favorite consumer crypto use cases, and my favorite non-crypto tech products as well.
All right, let's see if my microphone also buzzes. My name is Boris Alergant, heading up DeFi markets at Ripple. Ripple is a software company. We build crypto solutions for business. We've been around for 10 years building crypto solutions for businesses. We build on top of the XRP ledger, which is a decentralized permissionless blockchain. It's been around for over 10 years. My role is figuring out how do you get institutions to adopt DeFi technology. And it's really a Web 2.5 approach. How do you recreate traditional financial services activities, really 3 of them, lending, trading, and payments using blockchain technology, and developing that entire ecosystem for TradFi and traditional finance and traditional corporations to get into blockchain technology and to adopt it. Also, we recently had a great verdict against the SEC where XRP is not a security.
Yes. Blockchain 1 SEC 0.
Nobody from the SEC here, right?
Yeah, if there's one thing worth clapping about this entire evening, it's probably that ruling for all of us.
I know.
My name's Carl. I'm a partner at Six Man Ventures. We're an early stage crypto native Web3 fund. We have made over 100 investments to date. We were founded in about 2020. We tend to lead pre-seed and seed rounds and sometimes follow on to Series A rounds. My personal background is product and engineering. So prior to this, I was at Paxos, where I led on the product side, blockchain and tokenization. Previous to that was at Google, where I was a product manager in smart home ecosystem. And then prior to that, had a very different career in nuclear submarine design.
All right, so we've actually gathered a list of questions from the audience, right, that they would like to ask you guys. So I'll start with you, Carl. So how do you envision stable coins, right, influencing the landscape of user adoption? Do you guys invest in any stablecoin protocols?
So to date, we have not directly invested in a stablecoin protocol. And part of the reason for that is if I project out into the future, my expectation is that 99% of coins will be issued by centralized entities.
CDBCs, similar.
Not
No?
CBDCs.
Okay.
I mean, I think that with permission networks, but broadly, what I'll say is stablecoins, issued by Paxos, Circle, and
I see.
I think there's a place for decentralized stablecoins. I personally also use decentralized stablecoins, but if I think about the mass market and as very large companies get into the space, I expect they're going to be leaning on regulated, trusted partners to facilitate transactions. A decentralized stablecoin. So broadly, as we look forward, that's my expectation of where the market's going, and so because of that, we have not invested in any decentralized stablecoins to date.
I see.
But more broadly about stablecoins, after working, the annoying thing here is that stablecoins are the best use case in crypto, and I kind of think it's closer. Okay,
Yeah, a bit closer.
so I'll say that again. One of the things that people say is that stablecoins are the killer use case of crypto, and I just kind of disagree with that statement. I think there's a small percentage of stablecoin adoption that is mainly to acquire a stablecoin for the purposes of holding or transferring. But if you look at the vast proportion of stablecoin adoption, it's for facilitating transactions. It's used in DeFi as a stable store of value and a way to transfer value from US dollars to another asset. And so, kind of thinking about that more broadly, where do I think stablecoins are going to be really valuable? Is as the mass market starts to move into crypto, they're going to want familiar anchors that they understand. And so if you're trying to go ahead and start getting engaged in NFTs or in-game assets, and you have to start denominating every transaction in another currency, that's a really hard problem. And so I think as people start to literally onboard into crypto, stablecoins are just a very convenient unit of account that people are familiar with. And so I expect that stablecoins are going to be used throughout gaming, throughout NFTs, et cetera, throughout social, as really the primary way through which people start to buy assets and interact in this broader digital ecosystem that we're building.
So less. So I guess what you're saying, less of like a use case, more like a onboarding tool.
It's an onboarding tool, and it is a way to store value. But the whole point is you store value, and you can use it at a later date, not just to buy and hold. And really, how is this evident? If you look at the total value of stable coins settled on chain compared to Bitcoin, it's incredibly much more large for stable coins. And the reason is stable coins are used to facilitate transactions.
Makes sense.
I do think payments, by the way, I think with Visa and it's now onboarding Solana, which is like a higher throughput chain. I do think payments is a rip as well, obviously. I do think there's going to be a major purpose for stablecoins in payments, but it's going to take a very long time for that to happen. Financial networks do not change overnight. And so I think it's going to be a 10, 20-year journey for that to truly happen. But I think on the gaming and social side, the adoption of stablecoins will be much, much faster.
What do you guys think? What do you guys think of stablecoins?
I think stablecoins are an incredible tool, but again, the liquidity of stablecoins isn't always the best for payments today. And so Ripple, we built a business that facilitates cross-border payments. And I highlighted the fact that we are building crypto solutions for business. So our partners are really our customers, are financial institutions that are looking for an alternative to SWIFT to send payments. And currently we're facilitating over $15 billion of payment flow a year. And we're not using stablecoins. We're using XRP because XRP is actually more liquid than stablecoins for cross-border transaction flows. So that's been really exciting for us. But I think stablecoins hold an excellent place in the ecosystem, and I agree very much. It's an on-ramp onto crypto. And that's how folks will on-ramp onto crypto going forward. And that's what I think institutions can understand. If we take the approach or the view that institutions are going to be the big enablers of crypto adoption, retail is going to interact with institutions to buy crypto. And at the end of the day, blockchain technology, whether it's decentralized or it's a centralized technology, the end user doesn't care. They just care that a payment goes through, that it's secure, that it's fast, and that it's cheap.
Right. Right.
Yeah, I think I have to, with all due respect, disagree with that opinion.
Yes.
Just for
Opposite
fun,
opinion.
I think there's some great points made. I think there's two things that I want to say. The first thing is Uniswap actually published a research paper last year from Gordon Liao, who's the chief economist at Circle, ex-Uniswap as well, basically saying cross-border Forex on-chain is cheaper than TransferWise and all the competitors. Obviously, this relies on centralized entities like Circle, like people behind GN, and with EuroC as well. And so, it's certainly the liquidity depth may not be there quite yet, but I do think there's tailwinds that are pushing this, like, tokenization is the future, and all of TradFi. Like, I was at the Coinbase Institutional Conference in New York a few months ago, and it's just absurd. Like, these BlackRock people and Franklin Templeton, everyone's like, tokenization is inevitable, and obviously they're trying to pump Coinbase stock. But that's the first point. The second point, I think Solana is interesting. Obviously, Uniswap is not a Solana DEX, but I believe they launched a Visa partnership last week or something, where merchants can, I think, either receive payment in USDC. And so I think just seeing more USDC being plugged in to the infrastructure and the rails for, like, real world use cases beyond the on-chain stuff, I think is certainly interesting.
So this actually leads to, like, great question for, like, the next speaker, Boris. So Ripple announced something about CDBCs, right? You guys are helping to build that. What exactly do you think is the trajectory of CDBCs, and how does it compare to existing stablecoins?
Yeah, it's a great question. Well, CBDCs are obviously a polarizing topic in crypto.
Yes.
Let's address the elephant in the room. But CBDCs are inevitable in the long term, right? It is the digitization of cash. And there are private companies right now that are issuing stablecoins, but at some point, and depending on which country, those countries are going to want to own that, right? To make it secure, to make it fast, to make it cheap. And to make sure that this is a digital good that's a non-for-profit at the end of the day. Because Circle's pocketing 5% a year on 26 billion in reserves. Tether's pocketing, they announced they made over $1 billion a year on those reserves. That feels like that money should be going to the consumer, the person actually holding that stable coin. So and Ripple announced the product that we work with CBDC or central banks. We have a CBDC issuer platform, and that takes care of the end-to-end solution. Like I said, we are a crypto solutions for businesses. Central banks, in our eyes, are also businesses. And they know that there is a lot of promise in this technology, and they're excited to use it. So we've announced 5 US dollars CBDC with Palau. We announced a Euro CBDC with Montenegro. We've announced a project in Hong Kong. We've announced one in Bhutan, and we've announced one in Colombia as well. And what's beautiful about CBDCs, especially in emerging markets or emerging countries, is if you think about our vision of this internet of value, it's really expensive to bank people, right? And in those countries where people hold small balances, the cost of banking is incredibly high to the reward, right? So that it's just not economical. CBDCs are a great way to onboard that unbanked population to get them in the economy. And there are some downsides. And look, I agree. I think the privacy component that everybody talks to is quite dangerous. So it has to be done in a right way. And I think the ZKP and a lot of these privacy-preserving technologies are going to enable that. So you can combine the blockchain, you can combine the privacy or the benefits of both of those, and you can do it in a compliant way that gets governments comfortable. It's really exciting, and it's going to be a great future, I think.
I think a lot of CBDC are inevitable, but I think they are not going to be built on blockchain, right? And I think it doesn't. There is a lot of projects right now with central banks that are trying to use blockchain to try and do some CBDC implementations. But eventually, I think that it will end up being a distributed ledger, like what China is doing. And there is nothing wrong with it, right? But I think CBDC are not and will not be crypto, right? Because to be a crypto, I believe you need some open consensus, having validators that can be anyone can become a validators. You need the consensus mechanism. Although if you talk about a private blockchain with the central bank and some banks, at the end of the day, I don't believe that would be crypto adoption, right? But yeah,
I think it'd be nice if CDBCs were just built on a public blockchain, but I can see lots of reasons why they won't, right?
So I do want to say the Palau project was a CBDC on XRPL, on the mainnet, on the public blockchain.
Right.
So that was a public blockchain use case, and that's why we were so excited. Plus, it was a US dollar CBDC. So we do it at Ripple. We build those solutions. The XRP ledger is really capable of doing that.
So I think we had a lot of discussion about CDBC stablecoins. Let's change track, switch it up. Let's talk a bit more about, this is about, again, user adoption, right? Adoption in blockchain. So Uniswap, right? You guys have a really technical product, right? It's super complicated. It's very powerful. Technical users can basically make it do anything they want. Yet the app is really usable, right? Everyone uses Uniswap as like the market standard for what is a good dApp. How do you guys do it? What are your secrets?
Yeah, there's really only one secret, and it's to be one of the first. And so, this was before my time. I can't take credit for it, but the design team at Uniswap, shout out Brian is somewhere here. He's on the design team at Uniswap. Basically pioneered the most forked UI in all of crypto, right? Which is the token in, token out swap.
Right.
And there's something so elegant and simple about it, right? You have
No, it's crazy. I've seen it copied in like the original form, right? I've seen it copied like 10 times in all the different like places I've been to. I'm not sure if they are even just using a white label version of Uniswap sometimes,
Yeah, I mean the number of forks, both on the V2 smart contract level, and then more recently V3 is went off the BSL license, is absurd.
Do you guys think about that? So this is a problem that I'm from Web3 off, right? We care about this a lot because we want to make sure that our products are powerful, right? At the same time, developer friendly. But we also want to make sure that, sometimes developers, if you give them too many things, they use them all, and then the end user gets like a whole bunch of things to select, right? How do you balance that? You're a core one that does at Uniswap. How do you guys, does this UX requirement for whether it's usable trickle all the way down to the dev team? Or do you guys just build what is the most modular thing you can think of and then leave it to the UX team to fix, the user experience? Yeah,
it's a good question. And there's no one right answer. I think there's been learnings over the last couple of years. I think the first principle is, are there many customer support requests coming in of people who don't know how to use it?
Right.
And then, of course, on the complexity level, I have a confession. If you try to integrate Uniswap swapping via JavaScript, for example, it's very hard. I work at Uniswap and it took me longer than it should, which is weird. But on the other hand, you have the UI, which is very easy to fork. It's open source.
Right.
And we have a widget. And all these new meme coins, when they say how do you buy this meme coin, they embed the widget in their website. And so it's really proliferating this mental model of token in, token out swap. And I think that's the simplest abstraction for users. Some people call it the Robin Hood moment of, you say how much you want to buy, you can buy in fractional shares. Same idea with Uniswap. And you ideally just abstract away as much of the chain as possible. I will say recently, if anyone is trading meme coins or losing money like I am, it's very hard to actually trade on Uniswap for new high slippage coins. And so one new feature that was just launched yesterday or the day before, we had a somewhat alarming stat that many swaps were failing because of slippage issues, right? Because these tokens are charging 5% fee on transfer, the most innovative meme coin mechanisms I've ever seen. And we didn't build for that, right?
Right.
Because we expect people to be swapping stable coins, right? But yeah, so we launched a new feature that shows it does a simulation to see what's the fee on transfer for a given token, and it'll display that fee because the solution from a user perspective, and for many normal users, they don't know what slippage even means. But to get their swap through, they have to adjust the slippage to 10%, 15%, which sounds absurd, but I'm desensitized to that. 20% is average slippage to me. And now that shows in your Uniswap UI. So when you expand the swap details, you not only see your minimum in, minimum out, or sorry, maximum in, minimum out, you also see the token slippage that is accounted for.
Interesting.
Yeah, I mean,
what's 10% when you're losing 200%, right?
I mean, real quick on that, like Uniswap built an incredible product. And one of the reasons behind it was really simple. Anyone can go on and say, hey, I want to swap this token for this token. Okay, I need to click approval, but I get it. And then I swap. Like, it's a very simple product. I work in venture capital. I read a lot of white papers, a lot of pitch decks, and people are shilling me the most complicated reports. I read these white papers twice, and I'm like, what the fuck is going on? Like, I have no idea. And I think Uniswap, with all crypto, one of the issues we have, and Uniswap really nailed it well the first time, is having a really simple product to get users started. Now, again, they have more complicated products. If you want to provide liquidity, you can use concentrated and you can start to learn. Like, there's a journey there for the users, but you have to have an initial hook, a really simple user experience. Think about a company like Uber or, I guess Get, or that's like here. It's like, I say where I want to go, and I push a button.
No, I completely
agree. And that's a hundreds of billions of dollar business for a really simple experience.
That's like the mega trend of this era, which is that interface is the product. The interface is the product. Like, if you just look at the great products out there, like TikTok, right? Endless scroll, right? They pioneered it. It's perfect for short attention span people, right? They're a great algorithm that suggests things that's relevant to you. Look at products like even ChatGPT, right? We knew those models existed, right? But they had a chatbot interface for that. So the interface to the product, I think this is definitely a lesson that a lot of crypto native companies and applications should take in and work on. So for our last speaker, we also have a question. So one question I'd like to ask is, Web3 recently, we recently published a Firebase extension on Google, and you guys have a lot of support for blockchain companies. What are you guys read on the current user adoption challenges, right? Because you guys support so many developers. I'm sure you have a much better and deeper understanding of the current environment, right? How many devs are maybe using blockchain products at Google?
Yeah, so I think, and all of the topics we have are great, right? But I think at the fundamental problem that we have is that broad adoption cannot come if someone can lose its key and then lose all of its assets, right? Like, no one is going to have the knowledge and read, sufficiently to be able to use Web3 in a secure manner as of today, right? So I think the adoption comes with trying to be better at that, like whether it is MPC, social recovery, and a lot of what you're doing is pretty awesome in that direction, right? So I think that's a great step, but we need to be standardized. It really needs to be seamless for the users to be able to be safe, right? Another issue is really scams, right? A couple of days ago, Vitalik SIM swapped 700K was lost because of what? Someone didn't know what he was signing, right? And that's okay if I'm reading all of the contract that I'm interacting with because I'm a dev, right? But
no, there's no way you're reading Uniswap when you're there's just no way,
every new contract, right? Maybe not, but at least to see, okay, they are doing something that above my pay grade, or something that I understand that is not draining your assets, right? But you can't expect people to read the contract, right? So how do you do that? Do you need some kind of trust scoring? And I know MetaMask, I was working on MetaMask, so trying to explain before you click sign, explain a little bit what was the risks associated with the transaction. But we really bad at that in the space, right? So I think those two aspects are really like phase zero before we can talk about, all right, stablecoin and swaps and so on, right? It's great for us, swapping meme coins. But at the end of the day, if you really run adoption, I believe that it starts with like scams and really look what happens if you lose your keys, right? So that would be my 2 cents, right?
I see. What do you guys think? What are some of the hurdles for user adoption today? How are you guys getting more users like on your platforms?
Yeah, look, I mean, we're really focused on institutions, right? We're really building these solutions for
They
business.
have the users already, right?
They have the users. Like, we very much think, yes, the UX problem is a big one, right? Especially in our industry. And most people in financial services interact with the financial services ecosystem through a broker, through their bank. And it's important to have those customers to enable that technology to reach that end user. So we're hyper-focused on institutions. I mean, like I said, we're helping facilitate $15 billion a year of cross-border payment flows. We're paying out into, I think, almost as many as 70 different countries, right? So that for us is how we get users for Ripple, the software product. Now the XRP ledger, that has a ton of users already. There's a lot of benefits to it. There's over 3,000 different projects listed on the XRP ledger. And as a contributor to the XRP ledger code, Ripple has proposed certain functionality. So we're adding actually AMM functionality, and we would love Uniswap to be on there at some point too. There's native DEX features, a central limit order book DEX. And we also are adding DID. Again, we very much believe that a regulated, compliant future is how we get those institutions and that mass adoption to follow.
Yeah, from the Uniswap perspective, it's, I would say, fairly consumer-oriented,
Right.
Which may or may not be a good thing. And I myself am a MetaMask user as well as a Uniswap user, but there was something wrong in the early days, or like when V3 first launched, when Uniswap couldn't launch a marketing campaign. Because to launch a marketing campaign, you would tell them to go to Uniswap, and then at Uniswap, then you would tell them to go download MetaMask. And then they would connect wallet.
Our entire company is built on this. Our entire company is built on this, not having to download something else so you can use the app. Yeah.
Right.
So we know this problem.
So the key metric, or I think there's 2 key metrics for me, is the time to onboard, right? So how fast can I tell you about the newest meme coin and can you buy it? So that includes key management or wallet management, as well as on-ramps.
Yeah, fiat to crypto. Yes.
And I think one of those is harder than the other.
Fiat to crypto is hard. I think so, yeah.
Yeah. And then I think the second point is, I think actually I've changed my mind a lot in the last few months about AA and MPC. I was in Paris with ECC with Jen, and we were talking about, there was this like crazy debate of AA, MPC, and people are like, no, like you can't have like 3 of 7 like threshold, like no, you're not even using AA. And I'm just like sitting there like, but for what? Like, what are you even using this for?
Right.
And like, if you're Fireblocks, yeah, of course you need a very secure key management infrastructure to manage, billions of dollars. But if you're an average user who is trading a meme coin, or maybe is managing a portfolio of, I don't know, let's just say $10,000, you really don't need that level of security. And MetaMask, to its credit, has scaled immensely. And I think the interesting tailwinds that have changed my mind, and I've been tweeting about this a lot, everyone is super hyped about 4337 and account abstraction. And it's really not the solution, in my opinion. I think I like the approaches. I think we're going in the right direction. But one, there's no real use cases of crypto beyond a few handful of things. And then 2, friend tech, if those who are familiar, they use Privy, and they really just abstracted away everything. And nobody cares that, like, friend tech didn't even set up Privy correctly. Like, if you use Privy correctly, it's similar to Web3 Auth, where you have a network.
Yes.
They store both of the, like, friend tech or Privy theoretically could have access to everyone's keys,
right,
from my understanding. But but nobody cares, right? And why does nobody care? Because the upside and the excitement of the product, which is why I think Friendtech is one of the most interesting like new things, has shown to be more important than locking in the perfect architecture of a MPC or AA setup.
No, I agree with you. So this is actually something we faced as a company early on, which was some people. I don't think Privy is the only one to offer this like a semi solution. There were also other companies, right, that did something similar. And I think the problem comes up not at the beginning. The problem comes up much later, more like 2 years later when there's a breach. And then you basically have a honeypot of 2 years, right? So maybe acquired like 1 million users. So 1 million users keys on your system, right? And if you secure it well, it's not a problem. But there will always be like that 10% or like 5% of the companies that just don't. And eventually it leads to like these types of attacks. So for context, right, when we provide all of our like 2FA and self-custody solutions, it's not like no one gets their accounts lost, right? They still do, but it is not a scalable attack, right? There's no way to attack every response device and all that. There will be somebody who just leaves his phone unlocked, his laptop unlocked, but it's like 1 out of like right now like 30 plus million accounts, right? So I think it's a great way to get it at the start, and we don't discourage it. So we used to discourage it because we felt principally it was wrong, but we don't discourage it anymore. You want to store the key as a backup, go ahead. But we offer the option to offboard. So offer the option to eventually, if you want to switch away from that, delete all the keys to store, move it to something like AA or MPC, and we support that from day one, out of the box with whatever SDK you're using. So that's the compromise we've had to make, but I completely see where you're coming from. A lot of the companies eventually just, at the start, they don't want to use something too complicated, and then subsequently they switched. Yeah. So. Okay, I think we have run out of time. So thank you everybody for coming. It was great discussion. I think to give it the next speaker's thoughts. Thank you.
Thank you.